All right. So I'm self-employed. Um, Obviously, I don't have a W-2. I'm not working for anybody. I have to pay my own taxes. So what are the, I guess, like, what do you have to have when you purchase your home? I know it's 2 years of documented income, but what else when it comes to self-employed
You said what else is needed for self-employed borrowers?
to purchase? Yes, to purchase a home.
So, there's a couple different routes you can go, right? So, if you're self-employed and if you want the cheapest money out there from a mortgage perspective, which is Fannie Mae, Freddie Mac, FHA, VA loans, you need to show 2 years of tax returns, and we need to qualify you based off of the net income. So with those programs, we qualify off the net, not the gross. So when folks say they make $1 million a year, that's your gross. Your net is what you telling Uncle Sam after you paid all your expenses. This is actually how much I made, and this is what you're paying your tax bill off. So that money, that net income, has to be enough to support the new mortgage payment plus the monthly minimum payments that are on your credit report. So that's one route where you go the traditional conventional route, especially if you're trying to take advantage of low down payments. So you go that route, right? Then you have the non-traditional route or the non-QM route, which QM stands for qualified mortgage, and a non-qualified mortgage is basically a loan that Fannie Mae, Freddie Mac, or FHA won't purchase from a bank in the secondary mortgage, in the secondary mortgage market, right? So the banks who offer non-QM loans, those are more so like portfolio loans. They keep that money on their books and on their balance sheet. So with those products,
You
banks they
honestly, hold on, sorry, I didn't mean to cut you off, but
like right in the middle of my
I'm
fucking
sorry, but
spiel.
because I don't want to like
Okay.
act like I'm understanding, and I really don't because
Okay. So okay,
so you,
good to cut me off.
I just don't want you to keep going because this, it's gonna go over my head.
All right.
So you're talking about QM, non-QM loans, Freddie. I don't even know who's Freddie. Who's
So you got Freddie Mac and Fannie Mae, right? Those
okay?
are government sponsored enterprises. Those are basically the two largest mortgage providers in the world. Basically, they back all the mortgages. They buy them from the banks, right?
Okay.
And during the not the pandemic, but basically the government controls it, right?
Okay.
I had lost the words right there. The government backs them. Basically, GSE is government sponsored enterprises, right? So basically, if a bank, this is why you have 580 minimum, 580 credit scores, 3.5% down. You understand what I'm saying?
Hmm.
5% down. You have all these first time home buyer quote unquote programs with low down payments that can go to a conventional mortgage or FHA or VA because the banks know that the government will buy that money from them, right? So
Okay.
let me break it down a little bit more for you. So when a bank makes a loan, right?
Right.
When they make a loan, they don't keep the mortgage. The service they some banks, so all right, when a bank makes a loan, let's just say if it's Chase or Wells Fargo,
Okay.
for example, a big retail bank, when they make the loan, they will keep the servicing right of the loan, meaning they're servicing the debt.
Hmm.
Okay, they're collecting the monthly payments. If you got questions, customer service issues,
Right. Right.
you can
Okay.
call Chase. Right, that's servicing the loan. When property taxes are due, homeowners insurance is due, they pay it right from your escrow account. That's servicing. But what they sold back to Fannie Mae is the mortgage note. The mortgage note is basically your promissory note. It's basically you saying I, Tukes, agreed to pay back X, Y, and Z amount of money over X, Y, and Z amount of years
Hmm.
at this percentage rate, and my monthly principal and interest payment will be X, Y, and Z, right?
Okay.
They sell that mortgage note to Fannie Mae. Fannie Mae buys that mortgage note, and then Fannie Mae will trade that. It's called a mortgage backed security, MBS, and that's a bond on Wall Street, and they'll pull tens of thousands of mortgages all together in this one MBS coupon, and they'll trade it on Wall Street, and this is how they make their money too.
So how do they? What happens if you like if you
If you
don't?
default,
Yeah.
if you default on your mortgage, this is what we saw in the subprime crisis when there was a lot of defaults and everything like that because there was so many exotic mortgages out there, and a lot of them wasn't guaranteed by the government. They were guaranteed by other investors across seas and things of that nature because they were all making these new MBSs and packaging them and selling them on Wall Street, right? So that's
Mm,
why it was so exotic back then. But a lot of that doesn't exist today. This is
right.
why when I be talking my issues, like, because people just don't really understand how this game works, right? This market looks nothing like 2008, but that's a different topic and a different video. So what I'm trying to explain to you is that's what Fannie Mae, Freddie Mac purposes is basically to guarantee the lenders that they have a home to sell their mortgages so that way they will write more loans
Okay.
so that way more houses will sell and the economy will continue to go according to plan because the housing is a big part of the global economy because of what I just told you. A lot of these mortgages are traded on Wall Street,
Right.
so it's a lot that goes in with mortgages. So that's why when people wish for a housing crash and shit like that, so you guys don't really know what you're wishing for. Like you really don't know what you're wishing for. You're playing with fire right now, right? But to answer your question, that's what these GSCs are there for.
Okay.
Now, when you go non QM, they're not selling it to the GSCs because the GSCs have said, you know what, this is a non-qualified mortgage. It doesn't meet the scope of what we're comfortable with. So if you want to offer that type of mortgage, like a bank statement loan,
Okay.
right? That's a non-QM loan. You don't need tax returns. This is what we do with a lot of self-employed people right now because we can use those gross deposits in your business account and use that as your income. Now, obviously, you're going to have expense ratios that we have to calculate based off how big your business is, how many employees you have. You know, we have to make sure they're true business deposits and not transfers from one account to another, you know, things of that nature. But once we underwrite you, and if your deposits are enough over a 12-month time frame, we average that out. And if that can support the mortgage payment, your minimum payments on your credit report, then it's easier for you to get approved for financing as a self-employed person.
Right.
You got it?
Copy. Now, does that mean that it's riskier to do a non-QM loan?
Yes. It's riskier for the banks
Right.
to do it because they have to keep this money on their books,
Hmm.
or if they have private investors, right? Outside of because you ain't got the GSEs,
Right.
so you gotta have private investors, maybe hedge funds, things of that nature, that will basically raise the funds for them to lend. Because
Okay.
now those loans come with a high return
Right.
because it's a higher interest rate than a traditional. So if the FHA rates are 6% today, for example,
Hmm.
then the non QM loan will probably be 8 to 9%.
Right.
So it's a 2 to 3 point buffer that if you are a hedge fund or a private investor or just somebody who has tens of millions of dollars and you're trying to make a return on your money, you can lend it out, right,
Right.
to riskier borrowers and get a higher return on your money than it's sitting in the bank.
So that those are more for like investors.
Those are for self-employed people. Those are for investors. Exactly. So for a self-employed, because that's the topic of this video, this
Right.
conversation, for self-employed, you have option A or option B. Option A is the cheap money, but it's full documentation, meaning full tax returns,
Hmm.
cheaper rates. Or option B, no tax returns, 12 months bank statements, and you can get approved either which way, depending on how you file and what your situation is. So we
Hmm.
do deals, we do loans for all types of people. Whether you can go full documentation as a self-employed, or whether we have to use one of these non-QM loans to get you qualified. So we have all the solutions that's available to the self-employed borrower like yourself, Tooks.
Okay. So now, how do I go about, let's say, if I wanted to, because a friend of mine uh, couldn't purchase a home because he's self-employed. He has a business, but he had no income for himself. So he had no 2 years history of income. So how do you make sure you're not in this situation? I know we mentioned before you can pay yourself, but is there any other way that you'd be able to get into a home as a self-employed person if you're in his situation?
Say that again.
This guy's on his phone.
Yeah, but go ahead. Say it
Come
again.
on, bro. So how do you make sure that you can like stay on top of income? Like not stay on top of income. He didn't pay himself basically, right? So he has no income. He has a business. He made a lot of money with it, but when he wanted to go purchase a home, he showed no income because he didn't. I guess he didn't pay himself or he didn't have any income personally.
Well, yeah, so he couldn't qualify for like a traditional loan because he didn't pay himself, but he probably qualified for a bank statement loan. But he probably didn't want to put the down payment that the bank statement loan was requiring. Now that's where the plot thickens. So now when you do these non-QM loans, you're gonna have to put down 10 to 20%, just depending on what type of deal it is. You know what I'm saying?
Mm,
So most folks they want to try to have the cake and eat it too. You want to go FHA and do the 3 to 5% down with a conventional loan on FHA, but you don't want to file your taxes the right way,
mm,
right? So you can't have your cake and eat it too. It's either file your taxes the right way, pay some taxes, use those 2 years tax returns, leverage and get the cheapest money out there, and continue to buy real estate while you have that time frame to use those tax returns. Or B, you don't do that. You continue to write everything off. You pay minimum taxes, but you're going to put more of a down payment down and have a higher interest rate. And you, as the business owner, you have to decide what's going to be best for you. What's the best option? In some cases, in all honesty, it's best to just write everything off still, use your bank statements, and put down 10% and pay a higher rate temporarily.
right, right. Is it riskier to purchase a home in your business?
No, it's not riskier.
So like what happens if because he mentioned this, he was like if somebody fell on my property or something like that, then the like the business would take the hit as
No, it
opposed to
wouldn't because you wouldn't use your main business. Like you're not going to use Tukes Productions to buy the house. You're going to create an LLC that's specifically for that piece of real estate.
okay.
So if somebody falls down on your house and tries to sue you, they're only suing 123 Main Street LLC, not Tukes Productions.
So if they sue
It
one,
sounds
two,
like your
three,
friend didn't have the right team.
no, he a lot of I'm telling you, a lot of my friends, I don't want to talk bad about anybody, but they
But they're
just
not telling them the right information.
yeah,
Like
exactly.
he shouldn't even be asking these questions because your friend should have been able to tell him, no, dude, you're not going to use the business you get your money with. You're going to
Right.
get a new LLC.
Yeah, yeah. So what happens if something does happen with 123 Main Street? Then
Oh,
they
well, something happens. That's
but
why you
then
got insurance.
so you have to get insurance regardless of it whether it's in
Yes.
personal. Okay. So you,
Yes.
you just don't want to put your business at
No,
risk.
so the business that's your business that you're making money in has
Right.
nothing to do with real estate. Real estate is its own business.
Right.
So you need a new LLC for the piece of real estate that you're going to buy. And that LLC doesn't need business credit, doesn't need to be open for 2 years. It's just a brand new LLC. Now, if you're trying to do something like that, certain lenders will allow you to, in a non-QM space, and we're speaking about, to buy
Mhm.
a primary residence and still use a business name.
Oh, okay.
A lot of them won't though. If you're using your business name, then they're gonna treat it like an investment property, and then we have to structure the deal like an investment property. So that's
Mm,
very important to know too. So if you're gonna live in a house and want to buy it in the LLC's name to
right.
protect yourself from liabilities, then we have to make sure that you qualify based off the guidelines of those handful of lenders that will allow you to do so.
Okay, yeah, that was my next question because I was gonna say if you're doing it like a primary residence and you're doing an LLC, how does that work? I didn't know that though. So your rates are
You
still
learn
gonna be
something
higher,
new every
right?
day. And yes, your rates will still be higher. Absolutely.
Okay. All right. I think that was I'm sure there's a ton of other questions when it comes to self-employed, but that applies to my situation. So, um yeah, I think you answered my questions pretty well, my friend.
Well, that's what I'm here for. Ask MG, hashtag it, put a comment, and you never know. We might pick your question if it's good enough to come on Ask MG with MG, the mortgage guy. And maybe Tukes and Jordana too. Who knows who's going to be the co-star that day, right? It might be both of them. You might get lucky and get both of them. But whatever. Put your comments, ask the questions, and we're going to answer them. Peace.